South Korea took big steps on interest rates last year in a bid to fight inflation and to deal with the Korean won's sharp depreciation against the US dollar. Now, the Bank of Korea this week is set to hold its very first policy meeting of the new year. To discuss what we can expect, we now turn to Professor Sei-wan at Ewha Women's University. Welcome to the program.
Good morning.
Good morning. So let's start with the first question. Many analysts believe that the central bank will raise its key rate by a smaller margin of 25 basis points for the new year. Now, what's your outlook for the Friday's policy meeting and also for the rest of the year?
Well, I pretty much agree with market's expectation that Bank of Korea raises base interest rate by 25 basis points tomorrow, which makes the base interest rate 3.5%. Two major reasons for this small base interest rate hikes are weakening inflation and large base interest gap between Korea and U.S. It looks that Korean economy has passed the peak of the inflation around the end of last year. Annual inflation was 6.3% in July last year, but it decreased down to 5% in November last year. Also, the base interest rate gap between Korea and U.S. is rather large at 1.25% as of now. So Bank of Korea has some burden to stabilize $1 exchange rate with this base interest rate gap between U.S. and Korea. So they will raise the base interest rate at minimum with 25 basis points this time. This year, Bank of Korea can increase base interest rates once or twice by 25 basis points. But Bank of Korea is likely to cut its base rate around the end of this year.
Sure. And along with the policy briefing on a Friday, the central bank will also release its economic outlook for the country. Now, the growth is currently forecasted at 2.1% for 2023. Will Friday's outlook be any different?
Bank of Korea will cut its 2023 Korean economic growth forecast down to 1% level tomorrow. Actually, all major economic institutions, including Korean governments, are expecting that Korean economic growth will be slower this year at 1% level growth. Recently, Korean government has released its economic growth forecast at 1.6% on year. The OECD estimates Korea's economic growth to grow 1.8%, while the IMF forecasts 2% growth for this year. As the twin engines of Korean economy, exports and private spending falter amid global economic slowdown, Korean economy could face a mild recession in 2023.
Sure, the policy briefing meeting and the economic outlook are something that we have to keep a close eye on because they really set the economic mood for the new year. Now, let's talk about the real estate here in this country. According to a data released just yesterday, apartment purchases nationwide by people in their 20s and 30s came to around 28% last year, but that's lower than the average of 31% the year before, which is 2021. Can you explain the phenomenon?
The housing market actually skyrocketed until 2021, and it generated the riskiest part of the Korean economy by raising household debt up to almost 100% of GDP. And in the middle of rising housing price, the young people were forced to buy house by borrowing big money from banks because they thought it was the last chance to buy their houses in their lives. But all these have changed last year as Bank of Korea began to raise key interest rate. Domestic housing market is cooling quickly with lower housing price and much less transactions in housing market last year. And the higher interest rate gives larger burden to young household owners, and it decreases demands for house, particularly among young people.
Right, I can certainly tell that the atmosphere amongst the young people, especially in their 20s and 30s, is dramatically different in the new year. All right, thank you, Professor, for your time this morning. Hope to speak to you soon in the future.
Thank you for having me today.